A single post on X captured what may be the biggest story in memory chips right now. U.S. lawmakers are pressing the Trump administration to open a national security investigation into Chinese memory maker CXMT. And the timing couldn't be more explosive. Yesterday, ChangXin Memory Technologies debuted on the Shanghai Stock Exchange and surged 466% on day one. The company raised nearly $10 billion in China's largest semiconductor IPO ever, 212 times oversubscribed. At its peak, CXMT briefly became the most valuable company listed on a Chinese exchange, with a market cap approaching $500 billion. CXMT is now the world's fourth largest DRAM maker, holding 7.6% of the global market, nearly double its share from just 1 quarter ago. Samsung holds 39%, SK Hynix 29%, and Micron 22%. But here's the critical detail. 98% of CXMT's revenue comes from conventional commodity DRAM. They have zero presence in high-bandwidth memory, the premium chips powering AI accelerators. But chips are only half of China's offensive. On the same day, Google lost $200 billion in market cap over AI fears. A Beijing lab called Moonshot released Kimi K3, the largest open AI model ever built, with 2.8 trillion parameters. It immediately took the #1 spot on the Frontend Code Arena, passing Anthropic's best model, and they're giving it away for free. Bank of America told clients that Kimi proves Chinese labs can keep making big leaps, even with limited chips. The genius twist. Moonshot's founder learned to build AI as a researcher inside Google. Now the people who studied Google's work are using it to undercut Google's business. This is where the narrative gets powerful for infrastructure investors. Free models threaten model companies, the Googles, the OpenAIs. But every free model released means more companies running AI, more inference demand, more data centers. More data centers means more memory, more networking, more power infrastructure. The picks and shovels win no matter who's digging. The Pentagon has designated CXMT as a Chinese military company. Representatives Moulinar and Whitesides sent a bipartisan letter to Commerce Secretary Lutnick calling Chinese memory dependence an unacceptable risk. They want CXMT added to the entity list and U.S. companies blocked from buying its chips. For Micron, this creates a double shield. If restrictions hit, CXMT is locked out of Western supply chains, protecting Micron's pricing power. But even without a ban, Micron's real moat is untouchable. CXMT has zero HBM. Micron's record $41 billion quarter was driven by HBM and AI server memory, exactly where CXMT cannot compete. The CXMT and Kimi K3 stories sound threatening, but they confirm the same thesis. China is attacking on both fronts, hardware and software, and both attacks strengthen the case for AI infrastructure. Every restriction tightens supply. Every new model increases demand. For investors positioned in the build-out, this isn't fear, it's confirmation.